Let's take a look at some charts on Uniswap for this week's article on Brave New Coin. So Uniswap was first introduced sometime in 2018. It was talked about by Vitalik early on in Ethereum's history, but simply it's a non-custodial decentralized exchange that instead of order books is powered by automated market making. I'm not going to get into that specifically on the video, but that involves users adding their specific pooled coin to the smart contract for Uniswap and allowing that to participate in trading. And things like impermanent loss are involved with that. And there's a bunch of game theory around all of that. But all it boils down to is DEXs thought to be a joke for many years, kind of didn't go anywhere, didn't get any traction, are slowly ticking up as far as eating bites out of centralized exchanges for crypto. So if I'm a crypto exchange like Binance and I look at these volumes, I'm concerned because they're eating my lunch, they're drinking my milkshake here. Uniswap's volume in January, absolutely massive, total volume 50 billion, and this is on chain for all of these. An incredible amount of fees on chain are incurred. Layer 2 solutions like Leverage, like Gluon are being worked on, but this is sort of where we're at the moment. So if on-chain stuff in layer 2 can get cheap and used, the sky's the limit really for some of this volume. The other part about the DEXs is they're a regulatory gray area in that things can get listed there basically instantly, whereas centralized exchanges, listings have to go through lawyers, it goes through geographical or regulatory filters, is it a security in the US, is it a security in wherever? All that stuff will slow hype and momentum for a specific coin or set of coins that were created, by somebody in their basement on Tuesday morning and gets listed in the DEX Tuesday evening. That's not going to happen generally for a coin on a centralized exchange. And there are other problems. We can talk about slippage and front running. All that stuff is definitely an issue and can be an issue, and hopefully will be solved or is being worked on for layer 2 solutions with privacy and dark pools and that sort of thing. And all these DEXs have pooled pairs. So for the automated market making for Uniswap, basically you put up 50-50 of USDC and ETH for this specific pool, and you're paid out in fees, and in some cases specific liquidity farming, yield farming is available on other DEXs or for specific coins. And this is just a visual example of how it works. For me, until I actually did it myself, it was very difficult to understand what was going on here. But once you do it once, it's obvious. You put up this much value, it gets pooled, locked in the smart contract, and then you can put it in the liquidity contract. And then over time, you collect, in Uniswap's case, fees. Now that's the exchange. If we talk about the token itself, they airdropped 150 million tokens in mid-September 2020, and they sort of set off a chain reaction of other exchanges, Sushi and 1inch, just to name a few, that have followed in the footsteps of Uni and adjusted the model a little bit. But overall, for Uni, there'll be 1 billion tokens in the next 4 years, and after that, it's going to be a 4% inflation in perpetuity. If we look at the total value locked into Uniswap, I don't know if this is just BTC, ETH, and DAI in this calculation. I assume it is. Now, there's obviously other stuff listed on the pools, so I don't know even if this TVL is accurate, but it's over 3 billion, approaching 3.5 billion notional, probably a lot more when you take into account every single asset that's being pooled on Uniswap. So it's absolutely massive as far as its scope is concerned right now, relative to other DEXs and even relative to these centralized exchanges. If you look at the token itself, again, there's Uniswap, the exchange, the protocol, and then Uni, the token. Transactions spiked way up when the token was released, and it was hard for me to actually get a graph that made sense. I tried this in log. I probably should have just separated these out into two different graphs, but transaction counts have actually been increasing, and average transaction size is increasing. And you see that with tokens that are rising in value, so that makes sense. There's no divergence there. As price goes up, it gets more attention. As it gets more attention, it gets more transactions. It gets bigger average transaction sizes. NVT, inverse metric of economic utility, has continued to fall, so that's bullish. Active addresses is again a bit difficult to see because of the big spike on the initial airdrop. but those have also been increasing over the past couple months. So that is, along with the price, very bullish to see continued increase in activity, declining NVT. That's what you want to see. Then if we look at the Google Trends for the word Uniswap, and I always zoom way out just to make sure, like, is this actually searching crypto stuff? Because some of this stuff could be misinterpreted for other things, but this looks very much just Uniswap, the word, the exchange, and you can see it spiked way up mid-2020, probably when the airdrop happened, and it's creeping back up again as DEXs and DeFi are having a bit of a moment. Yield farming less so, liquidity mining less so, but DEXs and DeFi specifically definitely coming to the forefront here, especially with the Robinhood shenanigans that have been going on over the past week. Switching gears to the technicals for Uni, this is on the USD chart on the 4-hour. Not a lot of trading history, so you kind of have to zoom in because you can't really look at this on the daily and figure out what's going on. Uni kind of had a ceiling for several weeks in late 2020. Prior to that, it basically sold off kind of how you'd expect as any airdrop. People are going to have a windfall that were in for a while. They're going to sell. There's going to be more sellers than buyers. Eventually it reaches some sort of equilibrium, reverses, and you get this consolidation. And now we're in the markup phase where you're just getting successive increases in price, kind of, to me, as a response of both speculation in the token itself, but also the use of Uniswap, the exchange. So it's got support at 1410 psychological level, 920 yearly pivot, 200 period moving average. All that stuff should be support on the way down, resistance on the way up, 23, 27. If this gets past 30, it's going to get interesting. Not only is that above an R5, but that'll likely mean that Uniswap will be much bigger than it is in several magnitudes than currently to support a price above 30 like that. If this crashes way down, if there's some smart contract issue or problem with the code, you'd expect it to return to this 375 level. If we look at the cloud, it's been nothing but bull since that consolidation level around 375. It's had a series of bullish TK cross recrosses or Kijun bounces. Right now, 1350.14 looks like the level if this dips, where it would be a rebuy based on the cloud. And then lastly, looking at UNIBTC, first thing I noticed here was the pretty large bearish divergence, higher high in price, lower high in RSI here. Tons of support volume on the way down. So I like 48,000 sats. I like 45,000 sats based on Kijun. I like 34,000 sats as like the floor. The 200-day moving average will be at 34,000 sats if it breaks down. I like the possibility of a head and shoulders here over the next couple days, pointing to lows. All because this divergence likely needs to chill out a little bit. The least likely is probably a push to 65. Definitely a push to 001, 11, or 110,000 sats, whatever you want to think of that as. Probably the least likely. I don't think this can break all-time highs. I should probably check it before I say that, but I don't think this can break all-time highs before this bear div sort of figures itself out. So overall, DEX is definitely having a bit of a moment, have been increasing in volume over the past few months. Incredibly bullish for Uni, Sushi, 1inch. Incredibly bullish for all these exchange tokens. Future of DEXs, the future of DeFi, the future of decentralization in general looks super bright. The downside of all that has been ETH fees are incredibly high. ETH fees remain high. People seem to not care in the moment. There will be other layer 2 solutions coming online, hopefully, like Gluon, like Leverage. There will be other layer 1 chains that will try to compete against this stuff. I don't think they'll do well. I think ETH just has too much of a network effect at this point. And Uni is definitely a leader amongst the other DEXs, but having multiple DEXs in the system to me is just a good thing. We want competitors in every fashion. As far as the token is concerned, transactions are up, active addresses are up, Google Trends are up, price looks really great on trend, so everything looks fine for me. It's definitely buy the dip if it drops lower, and the BTC pair will probably need to relax a little bit over the next couple weeks before it breaks all-time highs.